Everyone, myself Vaibhav. In today's session, we are seeing some correction happening in the S&P 500, and as a result of that, it has dipped below 3,900 level. But moving forward, I feel that this correction, which we are observing in today's session, is going to be a good opportunity to look for the long trade opportunities for further targets towards 4,000. So in today's session of Market Movers, I will be making you familiar with the technical formations which are helpful for the building confidence in long trade in S&P 500. And if you consider the data docket for the day, both the data points which we got for the US have been on the upside. Even earlier during the European trading session, we got the economic sentiment indicator data, and here this has reached the highest level since the March 2020. That's when the pandemic began, and we saw the economic sentiments taking a nosedive. But slowly and steadily, the sentiment is now getting back closer to the pre-pandemic level. It is still lower compared to the pre-pandemic days, but now that the vaccine rollout is happening and we are seeing good progress on that front, the economic sentiments are likely to improve in coming months, and we might see in next couple of months the sentiments even getting back above the pre-pandemic levels, as we are likely to witness a short-term boom in the economy for euro area. Moving back to the US data, for the United States, we got the advanced goods trades orders, and also at the same time, the initial jobless claims data was released. And here, both these data points are pointing to the improving situation in the US economy. For the initial jobless claims, the reading is now below the 800K mark, which has been the case for last couple of weeks. So for this week, the week ended 20th of February, the initial jobless claims were at 730K, and the durable goods orders have also shown improvement, and this reading for the month of January is even better than the expectation, and month on month rise is of 3.4%. And in terms of no, this is only considered in terms of month on month. And also, we got the second estimate for the GDP growth rate for the fourth quarter of 2020. And there is not much of a revision, so I will not really go into the details of that. Now, moving on to the technical front, we will see what's happening in the S&P 500, and then we will also consider the gold. Let's start with the S&P 500's technical outlook. This is the daily time frame chart, and here we are seeing the S&P 500 correcting after a rally which we saw in yesterday's session. Even in the session on Tuesday, we had seen sharp turnaround after getting closer to the 3,800, and now we are seeing some correction on the higher side, but the formation is conducive for the buy trades. And if we consider the prior swing high which was there closer to the immediate swing low here on a closing basis, and from there on we saw this buying momentum creeping back in. So for next couple of sessions, I think as long as the closing is happening above this immediate swing high, which now stands broken, so we can consider this Tuesday's closing low as our immediate marker. So as long as price action is happening above it, we can be hopeful of the continuation of this bullish tendency which we have observed in last two sessions. So for today's session, the key price zone is going to be this consolidation phase area, which is there around 3,870. And I feel if we don't really see the dip below that, we can count on the S&P 500 to consolidate and then start the journey higher. But if we do see the breakout below these 3,850, then that will be a matter of concern, and we might have to adopt a cautious approach and wait it out. But for the time being, as long as those levels stand intact, we can do look for the buy trades. And if we consider these technical formation, both the pivot point series as well as the regression curve, they are still in the bullish trajectory. The only thing which we need to take note of is that the regression curve is now flattening as the price action has moved in a sideways manner for last almost 2 weeks now. And also on the pivot point series, we had seen that the S&P 500 struggled to cross and hold above the second resistance of this one's pivot point series, and this time around also it got closer, but it didn't really clear above that, and now it is correcting somewhat. So on the lower levels, we can use this confluence zone of 50 and 100 SMA, which is there closer to the 3900 price area. So around 3890 to 3900, we have this support band in place, and also these were prior swing highs. So I think this is the price zone which we need to watch out for in today's session. If we don't really see the breakout below this, then I think we can look for buying opportunities in even today's session. But for that, we will need next couple of hours of price action to show some consolidation. It should respect this price area, and then after that only we can look for buying opportunity with stop loss can be kept lower, closer to this immediate swing low. So for trade entry anywhere in the price band of 3890 to 3900, we can use a stop loss of around 3850. And then, as I said, on the higher side, this immediate swing high can be expected as our immediate goal. And as we mostly look for the risk reward ratio of at least 1 is to 2. Of course, our targets will need to be kept higher than that, and for a risk of around 30 to 40 points, we will need to look for the reward of around 80 points, and that will get our target fairly close to the 4000 price range. Now moving to the gold. Gold is seeing a fresh breakout on the bearish side, and I think it is likely to break past this prior support zone where it had bounced back. So in next couple of sessions, we might see a new low being formed even below this 1760 USD per ounce level. So in today's session, we will be looking at the price areas to watch out for, as we are seeing fresh bearishness creeping in the gold price momentum. And I think this is a good time to look for fresh shorting opportunities, even though we have already seen substantial decline in today's session. But still, even moving forward, it will be better for us to keep with the trend and look for shorting. So here, if we see that the gold doesn't get any support on this first support area of this one's pivot point series, and if it closes below this in today's session, then in next session also we can expect the weakness to persist. And as I said, the next target is going to be even below the prior swing low, and we can expect in due course of time the gold to get closer to US dollar 1700 per ounce levels. So if that is the case, I think in today's session, if we are fortunate enough to get the entry anywhere in the price band of US dollar 1780 to US dollar 1790 per ounce level, with the stop loss being kept above this confluence zone of 50, 100 and 200 SMA, I think we will have a good chance to make money on this short trade, and the stop loss can be kept closer to 1805 level, or at the max around US dollar 1810 per ounce. And on the lower side, the immediate target are going to be even below this prior swing low. So we can uh, we can be confident of this trade, as we have seen that the economic data has been on the upswing, and as a result of that, the equity segment is seeing fresh buying. But I think the gold is likely to suffer, and we might see it declining and getting closer to the prior swing lows or even beyond that. And as I said, the level of around US dollar 1,700 per ounce can be expected in next couple of weeks. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Ricoscopy webinar channel. Thank you all for joining in. Goodbye.